Hey everyone, welcome to a brand new episode of In the Money with Amber Kanwar. I'm super excited for this show because we've got Moez Kassam of Anson Funds. If you don't know who he is notorious for being one of the best performing hedge fund managers on Bay Street. He started his fund in 2007 with just a couple $1 million under his belt. Today, he boasts $2 billion in assets under management. But his investing style can be controversial. He's a short seller. Recently, he started activist investing. It's even landed him in some hot water with regulators, which he speaks to in this episode. Plus, for the first time, he reveals a new position in a beaten-up real estate stock. Let's get into it. The information provided in this podcast is for informational purposes only and does not constitute financial, investment, or professional advice. The views expressed by the host and guests are their own and do not necessarily reflect the opinions of any organization or company. The host and the guests may maintain positions in any securities discussed on the podcast. Always consult a qualified financial advisor or professional before making any investment decisions. This episode is sponsored by BMO Investor Line. If you're looking to build a portfolio based on in-depth analysis and long-term strategy, you understand the power of informed decisions. With BMO Investor Line, you get access to a wealth of research, market insights, and educational resources, including the BMO Investment Learning Center. Open a new BMO Investor Line account and you could receive up to $3,500 cash back. It's a great way to jumpstart your investment plan. Learn more at bmo.com/online investing. Moez Kassam, thank you so much for joining me.
Thank you for having me, Amber.
I feel like I've waited 10 years to do this interview, so I have so many questions. You don't do a lot of interviews.
We generally try and avoid being in the media, but given your history and being such a great anchor and all around Toronto, when I got asked, it was such an honor. I'm excited to be here.
Well, I'm excited to pick your brain because you have this reputation as one of the best performing fund managers in the country. Is it 15% annualized return since you started?
It's about a 15% annualized return.
Since inception, what is it?
Since inception in 2007.
In 2007. But since inception, what are the returns?
Since inception is a 15%
annualized return.
Yeah.
So I guess that's why you've earned that reputation and you've seen so many different cycles. But your style of investing sometimes can court a little bit of controversy. It can be a bit of an acrimonious type of style. Can you talk to me about how would you define your style and how you find opportunities in the market?
Amber, it's a good question. For us, we like being a big fish in a small pond. For us, we're looking for more catalyst-oriented situations. People look at our returns and they go, are you amongst the smartest investors in the world? And we say, no, we just realize that there's a lot of inefficiencies that exist at the lower end of the market, companies $1 billion and below, where we can be a big fish in a small pond. And we find there's a huge advantage where that market has a lot of euphoria and excitement. And for us, we'll go wherever the wind blows.
And so is that when you're finding those opportunities, because you run a long short book, are you mostly short? Are you mostly long? Does that split change over time?
Yeah, no, we run a multi-strategy fund. It's long and short. There's a misconception around that, we're a short-only fund or a short-focused fund. And, early on, we were one of the first people to really look after fraud and scam. But, most people wouldn't realize most of our money has been made on the long side, opportunistic and deal structuring side.
That was going to be my question. So you've made most of your money on the long side versus the short side.
That's correct.
Because you think about since 2007, there certainly have been periods of pain and contraction, but essentially it's just been this raging bull market.
Yeah, no, at the end of the day, we tend to go where others don't. So we sort of can pivot on a dime. We have a young, dynamic team. And, people ask what's going to be tomorrow. And I go, I have no idea. We literally are just, the competitive advantage is being able to adapt, understand, be objective, and realize and go to seek returns where others won't.
What does that mean? What does that look like? Why won't others go there if the returns are so potentially great?
People get used to it. Like you said, we've been in a constant bull market for, 10, 15 years with a hiccup here and there. At the end of the day, for us, it's 99% of people are looking in that direction, the odds aren't great. That the natural inclination of an investor is to look at something and he goes, oh my God, this is not a great investment, and put it aside, as opposed to saying, wow, we can actually make money shorting this name and making money on that side. Everyone has FOMO, I find. They're all chasing the same type of opportunities. And for us, we'd rather look elsewhere.
The thing about that, though, is FOMO can be so powerful, and so many short sellers, particularly in 2020, had handed to them because, meme trading and all of that, it was just such a powerful force. And you can really be caught offside when you're shorting in that kind of environment. How do you not get caught?
Yeah, first for us, I don't really view myself or the firm as a short seller. We're a hedge fund manager. But when looking at shorts, yeah, you really need to understand the risk associated, of the situation. It's funny when, you look at a period like right now, when the market's at its all-time highs, nobody's calling us around shorts. They only ask about shorts, when the market's just had a 15% hiccup. And what we find is investors are always doing the wrong thing at the wrong time. So for us, it's about being objective and looking at a situation. So in a time like today, there's more opportunities we find for the market to potentially go back up than reverse. But
that's interesting, because we've seen a pretty sharp pullback, and the market is trying to figure out, what do we do off of these lows? You think directionally the move is higher?
It potentially can be. One thing that I find is that, we've had this notion of buy the dip. Everyone's like, things drop. And at the end of the day, it's like, can they go right back up? And they go, oh my God, this is at a 15% discount. Reminds me of when I was a kid. My first job was at the Pickering flea market. And every day I had to come in on the weekends, and I would take a black marker and say $10, and I would take a red marker and cross it off and put $5. And people would walk in and magically think they're getting a great deal. And that stuck with me since then. And it reminds me of that today, where everyone's like, oh my God, look, stock's down 20%. It's automatically a buy. And it literally takes me back there. So I don't think the FOMO or, getting right back in is the best way, but there definitely are opportunities to look at on the long side today.
And we're going to talk about those in Pro Picks, but I want to stick with teenage Moez, because I heard a story that it sounds like a lot of those teenage years were actually foundational to who you are right now. And I heard a story that you also discovered shorting when you were a teenager.
Yeah, no, it's you've obviously done your work. You had a huge history in doing digging, so I'm not surprised you found this one. But yeah, as a kid, I had a job later on. I think I was 17, and it was manual labor, and I think I earned $2,000 that entire summer. And I'd done my first economics class, and I thought I understood the market. And I got, email had just started. This is the late 90s. And I got this email about the stock that was going to go up 300%, and this is why. And I did my basic DCF, and I go, oh my God, I can make my 2,000 and turn it into 6. And I put the $2,000 into that stock, and within a few weeks, it effectively evaporated, dropped 75%. And I was shocked. And then I read online about all these people who were shorting the stock, and I didn't even know what shorting was, but I go, oh my God, if I could get duped like this, so can anyone else. And I started to understand that there is so much fraud and scam out there. And, it's about buyer beware. So at that point, my eyes were open and starting to look at the market from a little more perspective.
Why do you think so many people shy away from shorting, or there is this negative association with it?
It's funny when you look at people talking about shorting a commodity or shorting the dollar. It's considered to be par for the course. But when someone talks about shorting an equity, it's considered to be un-American or against the economy, which I've always found, interesting. But to me, it's because 99% of people aren't looking in that direction. It makes it that much easier to, have alpha or generate returns on that side of the business.
And do you find that those opportunities are kind of cross-border? It seemed for a while there were a lot of those maybe short opportunities in Canada. Where do you find that more fruitful, or does it vary depending on what part of the cycle we're in?
For us, we're happy to look cross-border. I find there's a lot more euphoria and excitement in the US market. And with that, there are a lot of opportunities. But for us, it's about having a good network. We keep our ear to the ground to understand, the psychology and the sentiment we see around the investment climates. And, in the world we're at today, there's a lot of excitement everywhere.
So, I'd be remiss if I didn't bring up the fact that this kind of investment activity has landed Anson in some hot water when it comes to regulators, whether it's with the SEC or the DOJ. And I'm not here to litigate that, but I would like you to speak on the record about the frequent accusation that this is not just about uncovering fraud, that this is market manipulation. What do you say to that?
I'm glad you asked the question. In regards to us, we're based here in Toronto. So we're registered with the OSC, but because we have a lot of activity in the US, we are registered with the SEC as well. And so the way we view the world and regulatory overall is looking at the two regimes and making sure we take the most conservative approach on both regards. So, you really got to make sure that you're in the right and in the right path. But at the end of the day, we're shorting at the end of the day is okay. And, people talk about market manipulation, but it really, it's a lot of buzzwords, but there has been nothing on it around regulatory, et cetera.
I think the question comes up a lot is when it comes to the relationship that a fund has with a short selling research firm like a Hindenburg Research, like a Citron. And, for the listener, for the viewer, those are research firms. Like they don't have funds that they're managing. So they just publish research, often on the short side. And when they do, the stock goes down. And so there is concern about when funds kind of work together with those companies and stocks fall. What do you say about that relationship? Can you shed some light on how Anson works with those types of outfits?
Yeah, like all investors out there, we share information with everybody. For us, we will talk to other funds, we talk to journalists, we talk to regulators. Sharing publicly available information is great, right? It sort of gets the market more a larger understanding, et cetera. In regards to short selling, people, short selling is a good thing in our opinion, right? It holds people accountable. It shines a light on situations that are warranted. There's a lot of rhetoric out there about manipulation and all, but there hasn't been anything from a regulatory perspective that has said otherwise. For us, it's a market good, and we think that this is a good thing for all market participants.
Is it a breed of investors that are going extinct? And I ask that because I remember when Citron basically said during the pandemic, we're done. We're going to only publish longs. And Hindenburg, after their kind of famous short on an Indian company, also closed up shop. What do you know about what drove that? Because I know you're familiar with both of those shops.
Yeah, at the end of the day, players change, but the game evolves. And, we've been around long enough that we've seen a lot of people move out and say that there's greener pasture. And people say, why bother? Why aren't you doing it? And for us, it's because there's less market participants, it makes it that much easier or gives it that much better of an expected value where other people aren't looking there. We have been in a big bull market. And like I said, investors and even, investors do things at the wrong time. And so people are sending money to hedge fund managers who have been making money on the long side when the long side has been working for many years. And the people who haven't been doing as well because they're short, even though they're technically creating alpha, like a guy like Jim Chanos, can't get any money because it's just not been a strategy in vogue. But for us, that's why we like being a big player, small sandbox, focusing on catalysts, not really taking a market directional view.
And sometimes you're your own catalyst, right? Publishing the research, telling people what you know, that can be the catalyst. Is that the primary catalyst or are there others?
Well, for us, we don't really publish research. We're just sort of, our goal is to get the truth out there. So we will talk to many market participants about what we believe. And a lot of times it's, all that glitters isn't gold, right? You look everywhere and all the industries that have hype and euphoria and retail sentiment around it, it attracts fraud and scam. And there's great companies within the industry, but there's a lot of other ones that are doing things that are just completely untoward.
So where are you finding kind of fruitful opportunities right now? I can think of a lot of areas that there's hype. AI is one of them.
Yeah, like we sort of look for we call it thematic investing. So we see what are the themes, and it inadvertently attracts the same type of people. So as you mentioned, AI is all in the rage. You see what used to be around crypto, and before it was cannabis. There's always something, and then some investor or participant will ask us, what do you think is next? And there really is no way to tell. But for us, it's just about reacting to what we see there and being able to pivot when need be.
So are you looking for things that are just overvalued? Are they always frauds in your view? Or is it a mix of the two?
You sort of get a mixed bag. We don't really looking all the time at fraud, but you have a lot of companies that have broken businesses, or, people are investing around legacy. And for us, it's more important to, look for opportunities as they exist. We're multi-strat, right? So for us, a great strategy has been around activism, which is more on the long side, but it's sort of creating a catalyst and bringing more information to light around companies that are undervalued that could shortly be re-rated with just a little bit of help from an existing management team or board.
And I know that's a newish strategy in the next couple of years. I'm going to talk about that. But I just want to bring up one more final point kind of on the short side. Again, I have like 10 years worth of questions to ask you, but how do you, so every company, let's say, has a problem, right? How do you decide if the problem is big enough to warrant a short? And I want to use an example like Home Capital. For those that aren't familiar with that story, this one always attracted a lot of short seller interest. I'm curious if you were ever short. And there was a part of the business that was found to be underwriting mortgages based on inaccurate or outright lies, income information, right? And so short sellers really use that as an opportunity to say, this is not solidly underwritten. If there's a housing market pullback, this all comes undone. It ultimately became sort of self-fulfilling. There was a run on the bank, but it got shored up, and it turns out there wasn't really a problem there. Do you know what I mean? Like, how, maybe speak to that example, or how do you decide, like, if just because there's a problem area doesn't mean the whole company is a short?
Yeah, again, for us, we, because we're multi-strat focused, we're sort of focusing on all parts of it. But looking at Home Capital itself, you go back to thematic, right? There was all the rage around Canadian housing. Mortgages were being processed as quickly as possible. And at the end, there was fraud there, right? There were robo-advisors and signatures coming. And that was, I believe, Mark Cahodas, who uncovered a lot of that. And, he's a very animated guy who's online. And he was right. And at the end of the day, short sellers, a lot of times are right. Sometimes the timing is wrong. And that's what gets people into trouble in regards to where they are in their positions. But at the end of the day, that was an area that, like I said, anytime you find euphoria, excitement, you will find companies that are trying to keep up, and sometimes they're cut corners. And at the end of the day, they were caught for what they did.
Okay, so you've mentioned activism several times. This is super interesting. I want to know, when did the activism push begin?
We were sort of casually involved in activism a few times over the years. But we've really taken it seriously over the last 2 years. We've hired a portfolio manager, fabulous guy out of California named Sagar Gupta. He was working with Legion, and we sort of identified that he'd be an unbelievable guy to work with us in terms of enhancing what we're doing. And so for us, we sort of show him the Canadian market. And for us, the Canadian market is a very friendly pace at the end of the day. We find there's a lot of inept boards, management teams, shareholders, board members who don't have a lot of skin in the game, and there's ripe with conflict of interest. And so for us, if we can take that regiment and rigor and apply it in the Canadian market where no one really calls out bad governance, we think there's a real opportunity here. So we've been actively involved on a couple of Canadian situations, and we're still doing the US stuff as well.
Yeah, the US stuff, I don't know how much you can talk about, but one of the most recent ones is Match, which is the dating site. I know there's all kinds of rules and stuff about how you can talk about this stuff when you're on the activist side. Can you shed some light on what brought you to that story, what you think Anson can do in terms of unlocking value?
Yeah, match is not a great one because we're sort of involved in a proxy situation. So regulatory wise, we can't. As I said, we take regulation very seriously. For us, that's not one that we can talk about, but it's very out there in the news if you take a look.
It's very out there in the news. Okay, so you mentioned you've got sort of the U.S. going, and you've got these ideas in Canada, which I think we're going to talk about in ProPix because you brought one of those recent campaigns. Do you still feel like Canadian boards are complacent? You know, there was a real awakening in boardrooms, I think, post CP Rail when Hunter Harrison and Bill Ackman came in. But do you really still find that there is that complacency?
Yeah, I think that any market or any environment has a whole group of people who they're not necessarily bad actors, but they are a little complacent, right? They are not really focusing on maximizing shareholder return and shareholder value. And so for us, we try to be a check and balance on the market and saying, hey guys, is this the most opportune thing you can be doing to maximize shareholder value? And because everyone is friendly here, no one really wants to take that approach. It's a lot more measured. And we find with us, we're happy to say what we believe is right and do what's best for all market participants.
So does that stress you out? Because it is kind of a closed community on Bay Street. And I assume you know some of these people, maybe even socially. Have you had a situation where you're walking in and saying, hey, I think you should do this, but I'll see you at I don't know, if you go to the tennis club or wherever you go?
At the end of the day, our job and mandate and mantra is to do the best thing for shareholders, for ourselves, for our investors. And at the end of the day, we try not to take it too seriously. Sometimes you're going to be right, sometimes we're going to be wrong, but we try to remain professional at all times. And yeah, Toronto's a small place, so sometimes you're involved with something, but most people understand the game for what it is and can be objective, while you're dealing with someone in a boardroom and still be friendly, outside at the same time.
So you've got a short book, you've got an activist book as well. Do you just like own Canadian banks or telcos, or is that too boring?
We just find there's no, competitive advantage for us in having a passive long book on names that are sort of just going with the market. It really isn't our game. For us, we've got a structured financing book where we do a lot of interesting financings for companies both in Canada and the US where, we like the underlying company and believe with a little bit of extra growth capital, they can make something of themselves. So for us, we feel that there's a real advantage. For us, multi-strat is the way, and we pivot, right? For me, as a manager now, I find that I was like the big drummer playing the musical instruments, trying to get as loud as I could, but we've got a fabulous team. And so for me, I've moved in more of the role of a conductor. So I'm trying to make that symphony work. And then when we realize it's better on this side, let's pivot over there. And that's sort of the multi-strat model that has been proven successful over time.
And real estate is a newish part of that as well, or has it always been part of the ethos of Anson?
No, you know what I find, again, we find that there's a lot of passive money in the real estate book. And, I identified a guy, Michael Misagi, who ran the largest REIT fund in Canada. And I said, wouldn't it be amazing for you to come and do it with us, but do it on a smaller scale where we can get involved in activism, get involved in catalysts and really having a competitive advantage. So now he's moved over to us. And we're involved in some great situations together and really, providing alpha. So we're pretty excited about that as well.
So this is an interesting market. And I know we'll talk about it because it's one of your pro picks, but real estate people come on and they lament. They say, you can buy real estate cheaper in the stock market than you can buy in real life. The question is around those catalysts. It's a really frozen market, right? Like if you want to do a transaction, who's out? Like, what can you do? You can scream, this is undervalued, but what can you do?
As I mentioned prior, people do the wrong thing. Sentiment shifts, right? So everybody was like, Canadian real estate is the greatest investment idea, and everyone wanted to talk about every REIT under the sun. And then things went like that, and everybody was coming in along the way. And now the opposite's occurring, right? There are interesting situations in the real estate market right now as things have dropped. Some of these names are down 50, 70% in short order. So for us, it's just a matter of being objective, looking at the situation for what it is, and not just saying, oh, we're buying something because it's at a discount, but how do we go about unlocking that discount, whether it's being constructive conversations with the management team, asking them to divest of assets, return money to shareholders, do buybacks. So, we find that at the end of the day, we believe we have the right system and process in place, and we've proven it over time. So a lot of management teams are excited when we get involved and want to do the right thing. So we're happy to partner with them.
This is also granular on the on the ground, company specific work that it seems like you're doing, and all these strategies that you've mentioned. So how do you layer over macro? Do you ever how do tariffs? Let's use tariffs right now. Does that complicate the strategy?
It's an interesting question, right? In regards to macro, we find that people ask me all the time, what's your view? And I really have no idea. Our objective is to, make money where the opportunities present itself. Tariffs, it's a beautiful thing going on right now in regards to uncertainty, right? There's a lot of anxiety and angst in the market with market actors and participants everywhere. I have a friend of mine who runs one of the largest bubblegum companies called Pure Gum. And he's like, I'm sitting pretty because our production is in Switzerland, and Switzerland is the most neutral country in the world. And suddenly there was a 30% tariff put on Switzerland. And watching him, super operator, deal with this type of situation, where does he move production, rush product into the US? You realize a lot of people are dealing with uncharted territory and, strange situation. But for us, we have to remain objective and look at the ideas that are presenting themselves in a market like today. It also reminds me of COVID, right? The same thing happened. March 2020, market drops 15% in short order, because we run a hedged book. So we're always seem to be okay during those times of period, but yet we will underperform when the markets are ripping up. But March 2020, today, we're sitting at all-time highs. And what happens? Other investors, other funds are dealing with a big drop. They're dealing with angst in the office. They're dealing with investors and LPs calling them uncertainty. And that's when it gives us an opportunity to shine. We can come in, we can look around the table at all the deals and opportunities. There's normally 12 guys. Just like March 2020, again today, 3 people at the table. So we can really do interesting work, extract greater value, and really maximize returns during periods like this.
So, and that's because you had the short book, which protects you on the downside. Are you more inclined, though, to be bullish, just like March 2020, which was such a fabulous recovery?
Yeah, actually, even during, we had a great return, post March 2020, but it's not like we could have predicted it going up. We sort of identified the trends and say, listen, with all the market participants we're chatting with, understanding euphoria, understanding sentiment, we can take advantage of those situations. There really is no bell at the bottom of the market. So you really just have to deal with every day as it comes.
It's so, I wouldn't say there's euphoria out there right now. It's so fearful. Is that a contrarian indicator to you?
Yeah, like I said, people are calling us now and asking us for our best short ideas. And that right away triggers, it's probably time to get long. Anytime that happens, we find the market's about to bounce. But, with the world we're living in today, we really don't know what tomorrow brings. So we are really reliant on our network, on our process. It's wide and diverse, and, understanding every day is a new day and pivoting as needed.
How quick are you in and out of stocks, or does it vary?
Oh, it completely varies. Some names we're in for months on end, for years, and some we're in and out in a few hours.
Oh, wow. Okay. So super quick. I know you think a lot, you spend a lot of time building the business from 2007, now $2 billion in assets. And you're now spending a lot of time thinking about other things, the world that we live in, and giving back. By the time this interview airs, we'll know the results of the federal election. And I think there's never been an election in our lifetime that has brought out so many Canadians who want to say, just because so much feels at stake. There's record voter turnout already in advanced polls. How do you, as an investor, think about the outcome and what's at stake?
At the end of the day, it's a very precarious time around Canada. Sensitivities are super high around a number of issues. First and foremost, we're not going to be the 51st state. I think most people in Canada are agreed on that. And, for us, I think we have to acknowledge we live in a wonderful country. I come from an immigrant family. our family had to escape East Africa overnight in the mid 70s and were welcomed here with open arms. And I think Canada is such a great country because of that social safety net that, some people take for granted. And I think we've built a fabulous country. And, it's about creating equity, having equity with people, having equity with, everyone across Canada. And so for us, it's a matter of having a good, credible, political group appointed. I think, between the parties, they're all pretty civil and great. What I loved, watching the debates the other day is it's so different from the Americans, right? At the end of the day, that there's some tense moments, but everyone hangs out. It's jovial. They realize they respect one another. And I think that's something Canada has that, a lot of places don't, is that we respect one another irrespective of our political view or a view on a stock, and we can do that. And so for us, we like investing, around equity and, that sort of thing.
We also have a situation where investors are kind of thinking about, how does Canada get its mojo back? Because the last 10 years, the data shows, have not been great. As somebody who spends a lot of time around business leaders, and you're trying to build your own business at the same time, what do you think the answer is?
It's a big topic in this election, right? How do we create more innovation? How do we keep jobs? How do we keep, processes, manufacturing here? And, red tape is an issue, right? Housing has been a huge driver in regards to the economy, and now it's not there anymore. And how are we able to pivot? It's a really great question. And I think we need, I think what's happening with the US in regards to the issues with Canada is leading us to look inwards, which is good. We need more interprovincial trade. We need to break down some of these barriers. And that's been the catalyst. It's caused the catalyst. It could go reverse activism in a way that's forcing us to become more efficient and not reliant on just being the US's partner.
There's things that the government can do to fix the country, but you, through philanthropy, in partnership with your wife, have been busy giving away millions of dollars to various different causes, some high profile, I think some more under the radar, but all with that kind of, it seems like they're centering around education, they're centering around health. Do you think, you think back to 2007, Moez, was that always part of the goal, giving back, or you got to a point where you're thinking, okay, now is the time? What's the ethos around philanthropy?
Oh, it's a thing I think about a lot. And like I mentioned, our situation coming from East Africa, being welcomed with open arms, you'd been given that shot, right? And with that, coming to Canada with nothing, and then being given an opportunity to, take a level stance and move ahead. And so for me, it's always been in the back of my head. But yeah, starting a fund, you got to be all in on that. So from 2007, it was focused on that. Now that it's fast forward 15, 20 years, you start to be, looking and understanding what's out there. And so for us, I think we've developed a very good process in our fund and, around catalysts, around creating equity, around real checks and balances. And I thought we could apply some of that same instruments, use the same instruments in charity. And so for us, everyone deserves an opportunity to thrive. And can we make the world a better place? So yeah, we're doing some larger projects, some smaller, but it's around catalysts. It's around trying to be more effective. So we call it a fund, an equity fund, instead of a foundation. And the reason is when we go in for a meeting, when we go in to meet a particular charity, it's, or the emphasis around equity for the people, but equity always trying to get a return on what we're putting in. And a return doesn't necessarily mean a return on capital, but having that multiplier effect that can be a benefit to society at large.
And of course, benefiting from the success that Anson has had. In 5 years from now, what is Anson up to?
As I said, I've sort of moved into the role of the conductor. We have an unbelievable group of portfolio managers at our office, and it's about human potential, unlocking, what all these guys can do. So, we're giving people enough room that we can sort of broaden out. We've added a new principal to our team, Laura Salvatore. She's the general counsel and COO, and she's really bringing efficiencies that I never knew could exist in a world that we have today. You know, Anson overall is here to stay. The idea is we believe the next 5 years will be better than what we've had. And as long as we stick to the knitting, you know, understanding catalysts, understanding, you know, what we're good at and avoiding what we're not. You know, I'm super proud of the team we've built. And, you know, I believe the best is yet to come.
We're going to take a quick break. We're going to dip into the mailbag when we come back. But before we do, I wanted to bring our viewers a snippet of a conversation that I had with the CEO of Raymond James Canada. They're one of our sponsors, and I had a chance to speak with the CEO about the current state of affairs with Canada and U.S. relations. Raymond James is an American company, but we talked about how they've got deep roots in Canada. So Raymond James, we think of, it's an American company, but it's actually been in Canada for 25 years. This is coming at a time where there are big questions about the relationship between Canada and the US right now. So how do you, as an operator, deal with those tensions?
I'm glad you brought that up. We are, and I'm very proud to say this, in our third decade serving Canadians as Raymond James. We can actually stretch our history back 100 years in Canada directly to 1924. And when J.L. Gildan Company was founded. And in fact, two of his direct descendants are advisors with our firm today. And through the combination with 3Max in 2016, we can actually push our history back to 1849. So that's pre-Confederation. So we've had a long time here in Canada. We're now 2,000 associates coast to coast and working with Canadians in both private client part of the business as well as the capital markets part of the business.
How is the Canadian market different and what kind of growth does Raymond James see here?
The main focus for us really since 2001 has been on the private client part of the business. And so I think at the time when Raymond James came into Canada, we had about $6 billion in AUA and we're close to 90 today. We're serving over 100,000 Canadians on the retail side of the business. And so we continue to invest in that private client part in particular. So that's investing in our advisors, the practice management programs, in our branches, and in our platform. We've got a couple of massive technology programs that we're about to deploy in Canada over the next couple of years that will set us up, I think, for the next couple of decades.
Okay, so we've had a few viewers take advantage of the opportunity to put a question to you. One is on Tesla, and I was kind of biting my tongue because I knew Tesla was going to come up. Is it a buy at these depressed prices? This one coming from Doug in Montreal. So you think about someone who's attracted to short selling. Tesla seems to attract all the bears. How do you think about this? Is this like almost too obvious of a name for you?
You know, as I mentioned previously, this is one of the largest companies in the world. We really have no edge looking at a name like Tesla. But if you understand the mantra, you know, we sort of zig when others zag. Everyone is so negative on Tesla. It's a very legit company out there. You know, it's dropped, 70% in value. And it's all around, the cloud around Elon Musk. But, Elon Musk, as he's publicly stated, his time within the Doge world and is sort of coming to an end, and he's committed to being focused on his company. So, it's an interesting long from that perspective, but it really isn't our cup of tea.
Okay, so you'd be more inclined to be long, but you're not even really looking at it. One thing we talked about earlier is crypto. What are your expectations for Bitcoin over the next 3 years? This one coming from Saul in Toronto. Are you into crypto?
We'll sort of play around catalysts, etc. I think you've got a world now where, gold was believed to be the storer of value. And in the new generation today, some people believe that's it. But as I said, anytime there's hype and excitement, we see rampant speculation. It really isn't, our place to play, but we'll play around equities here and there. But at the end of the day, we have no long-term vision around crypto.
Do you own Bitcoin?
We don't own any passive Bitcoin at all, no.
You don't. So, are you more inclined to be short some of these smaller companies that try, like a miner or whatever's out there?
No, we really get involved around catalysts, oriented situations. For us, it's just, an industry we're not really looking at right now.
Okay. Another one we have a question on is on quantum names. What do you think about Quantum Computing Inc.? This one coming from Trevor on Instagram. There was a bit of hype on this for a hot minute.
So again, like anytime you see hype, hot minute, you look at the chart and it's like that. So quantum computing is a real technology. It's going to be here to stay, but the catalyst associated or the adoption of the technology isn't coming for the next 20 years. And, we sort of looked at it when all those stocks went vertical about 6 months ago. And you see there's a lot of hype, everybody talking about it. But then one day you saw Jensen, the guy from NVIDIA, in his random keynote speech, which had nothing to do with quantum, come out and say, hey guys, this isn't really going to be something real for 20 years, which was normal course for him. And suddenly stocks dropped 40%. And that's when you realize there's a lot of hot air, hot money in these types of situations. So you want to avoid euphoria and excitement on the long side and not buy into those types of situations.
Is there still room to short, or you think that trade has played out?
For us, the trade is played out, right? You sort of see a stock go like that and it comes back down and, we sort of move on to a greener pasture.
Okay, let's talk uranium as a final question in the mailbag. Do you like uranium right now? What's your view of Cameco? This one coming from Arnie in Toronto. It went parabolic for a while and it's pulled back.
You'll be able to get the philosophy of what we do is like, again, this was a trade that had a lot of euphoria and excitement around it. Even from an institutional level, it was sort of the trade of all the fund managers around Toronto last year, and they did very well. And they did it, but for us, we just don't really have an advantage looking at something like that. For us, FOMO isn't really investing. So we try not to chase ideas like that.
So even on the long or the short side?
Yeah, well, you know what? We just haven't really played the industry as a whole.
Okay, super interesting. Now let's get into pro picks. ProPicks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, you brought 3 ideas to us. They're all on the long side, is that correct?
They are.
Okay, let's get into it. The first one is Gildan, and that one was a super spicy activist situation where the board fired the CEO, and there was basically a cavalry of shareholders that wrote in and said, no, you're going to reinstate the founder and CEO, Glenn Chamandy, and they won. With the power of Browning West. Were you guys involved in that?
Yeah, we were very involved in that. So we had a couple of press releases out, and we really liked the name and really liked Glenn. We think he had built an unbelievable company and was dealt with in an unfair manner, where an overreaching board, did that. And at the end of the day, we're looking for great companies. This is a company that has had a great return over time in regards to building shareholder value. And we were very involved before, and it publicly came out and we had sold our stake, but they're dealing with the same type of tariff situation now that a lot of are. And for us, you want to back managers who have been there, seen it, done that, have the experience, have the wherewithal, have the cheapest cost of capital, and that's Gildan. So they've got a manufacturing facility in Bangladesh, and that sort of took the stock down 30-40%. But we believe Glenn and the team, and now that new board that we helped put in place, these are guys who are super qualified, super invested, and doing the right thing. And so we believe that this is a stock headed up.
So you sold, and now you're back in.
That's correct.
But you're supportive of Glenn and management, and you're just taking advantage of the pullback there.
Correct.
And so, sorry, how much upside do you see?
I think there's, a 30% return in the next little while, but we believe this is one that's going to be great for long term, right? They're a low cost producer. We're dealing with an economy that's sort of softening. And at the end of the day, products like this that are, unbelievably made at the lowest price and, out there at the lowest cost, those are the guys who are going to be able to hold and gain market share. So we're pretty excitement around Gildan for a number of reasons.
The second pick is Vistry Group, and maybe not a household name, a home builder in the UK. You're a pretty big shareholder, and I saw so is Browning West, which, maybe, I don't know if you like them in particular, you like working with them, but they were, of course, active in the Gildan situation.
Yeah, as I mentioned, for us, we rely on a lot of market participants. Browning West, have an unbelievable team that really find interesting situations. And so for us, we'll follow the network, right? We do great work internally, but we will borrow ideas from other people from time to time. And we saw Browning West go into the situation around Vistry long before we got involved. But at the end of the day, we saw the opportunity of merging two of the largest home builders together around social housing, and we were happy to participate in that, and we participated in the activism there. And so again, we had sold off a lot of our stock, but the company had a recent trip up over the last few months. But because we know the situation so well, we know the management team, we're not reticent to step back into a situation that we know pretty well. And so for us, this is a company that trades at 4 or 5 times earnings, 2 billion pound market cap. That's down 50% in short order.
I was going to say, that's a big trip up.
That's a big trip up. They had a number of things, but again, it's about understanding the management team. And Greg Fitzgerald, the CEO there, is a super smart guy. He's had 3 exits. He realizes his back's against the wall. We went there. So for us, it's like I said, the sentiment. So I went over there. I spent a bunch of time with them in London, across the UK. And anyone we spoke to, they're like, don't talk to me about Vistry. Because of everything that had happened, nobody wants to touch it.
Can you backstory what happened?
Backstory what happened. So the company, they were actually in Toronto. They were we have an Anson Thursday night party, and they came to our party. They landed Friday morning back in the UK. And when the guy landed, Greg landed, he got a message that there was some situation around one of their operations. And at the end of the day, there was some mismanagement around cash flows and production around some of their facilities, and they had to have a big earnings warning. And it was all on the fly. There's rules in the UK where you have to announce it right away. They didn't really know the extent. And then fast forward 2 weeks later, they had another earnings warning. So people were really, really, irate about the situation.
Were you included?
We weren't involved. We were really
okay.
there. But for us, because we knew it, we could take advantage of the opportunity. You can see now it's sort of coming into its own. And they still throw off a lot of cash. They're very active on the buyback. And they've got a lot of good stewards around it from a shareholder and from a board member basis. So we're excited about that one. But again, we're talking our own book.
Well, no, it's interesting because looking at the chart, you might think, well, this is an obvious short. This is, looks like the other stocks that you might short. So it's interesting that you saw the stock plunge, but you're willing to actually step in because you got to know the management. Yeah,
it's funny. In the UK, you have to post your shorts. And so we actively contacted the short sellers who were involved in the name to say, are we missing something? Right? Again, it's a matter of being objective, talking to all participants and saying, you guys did an unbelievable job. The stock just dropped 50, but what keeps you in the name now? And so having that ability to talk to people, being comfortable, being ready to take some type of, awareness and heat, whatever it need be, or just putting yourself out there. I think our team, we do it very well. And we look at companies from all angles, and that's really now been internalized in all our management team. All our portfolio managers enjoy asking the right questions, aren't afraid to get on a flight, pick up a phone, have tough conversations, and, see over the horizon and make the right decision.
So is that what's happening in the office? Somebody comes up to you and say, I got to go fly here. I have to check. I got to count the widgets. You green light that. That's expense approved.
I green light it quickly. For us, we call it the hustle, right? We want hustle. We want to have, it's a hustle mentality. It says, get on that plane. Don't worry about it. You think you're going to get something from that conference? Go. You think you're going to meet a great management team? Go. And it's not going to work out, but the expected value on that trip or that expense will pay off in spades. And so we're always happy. For us, it's about seeking the truth. Right. And if you can go to a situation and you think you're going to be in a better position as a result of it, go there. And we try and do that more than most.
Well, and obviously showing up in the returns. Your third pick is interesting. I think we might make some news here, at least confirming your ownership in InterRent REIT. Are you a large shareholder of InterRent?
I believe we're the largest shareholder of InterRent.
Largest shareholder of InterRent. So I know Bloomberg sort of ran with that. Anson said to have taken a stake. So now we can say Anson has taken a stake.
Anson has taken a stake in InterRent, correct.
So why did you take a stake in InterRent?
As I mentioned, there's a lot of interesting opportunities right now where people aren't looking. And we believe REITs there are amongst the best in class of ideas to look at. We believe this company trades at a 30% plus discount to its NAV. And we believe that, the board, with a couple of interesting changes can really unlock some of that value. So we're in constructive dialogue. They've built an unbelievable business over time. It's 12,000 apartments across Ontario and everywhere. But we believe that shareholder rights are important. And if we push for change, it's going to be in everyone's best interest.
It's those tweaks to board. What does that mean? Is that a nice way of saying you want a new board?
It's not necessarily we want a new board, but we just want the board to act as a fiduciary for shareholders. Do the right thing, return cash to shareholders when needed, do buybacks when appropriate, don't buy assets when you're trading at a discount, standard stuff that I think all boards should be thinking about at all times.
So InterRent is a multi-residential REIT concentrated in the GTA. It has been under massive pressure since the summer. There was a rally around the stock. It gave back and now it's up again. What are those things? Like you mentioned it, do buybacks? Do they have the cash flow for that?
They have a pretty interesting cash flow. It's a 10% AFFO. So we believe that cash is way better off being used to repurchase shares than to make further acquisitions. And then when you're trading at a discount, acquisitions become tough, right? That's where there ends up being a natural conflict sometimes between shareholders and management teams. Management teams inherently want to keep growing their business. But if you're trading at a discount, the best way to maximize shareholder return at that point is the best opportunities to buy back that stock.
So you want them to stop pursuing acquisitions, at least for now?
That's correct.
And how have they greeted that message?
We're in constructive dialogue. Sometimes the conversations aren't the easiest, but we believe we're doing the right thing.
Do you like management?
They're good guys.
Do you want them to stay management? I'm going to push you.
We're good.
Okay. What about a transaction for InterRent? Do you think it makes sense to pursue strategic alternatives?
I believe that companies that trade at a big discount are attractive to other participants out there. So we believe that other guys would potentially be interested. There are some big, real estate companies out there that have publicly stated they're looking to grow. And so for them, it's a natural, easy pivot to buy an existing asset versus going and creating a new one.
I go back to what I said about, how do you be that catalyst for potentially a transaction when the market seems so frozen?
No, it's a good question. You always, Amber, ask the right things at the right time. It's a tough market. Like when this stuff came out, there was a lot of excitement around it. And then all the tariff stuff came and markets are a little more frozen. You're right. But at the end of the day, if you believe you've got a great company and a great system and, the markets will open up again, right? There will be buyouts. There are going to be new banking transactions. And we believe that the right strategic people will come along and want to purchase an asset like this, irrespective of what's happening in the world.
Moez, thank you so much. I really enjoyed our time together. Maybe I'll leave with one softball question.
All right.
Your favorite restaurant right now in the city?
Favorite restaurant in the city. I just had a wonderful meal at Quetzal, which is a Michelin star restaurant on College Street. And it's not overly fancy, but just phenomenal food. But we've taken Canada's biggest gem, Rob Gentile, who was part of the Buca Empire here, and we've moved him to California. So we started our own restaurant called Stella in California. So I have to shamefully talk about it and push that. Like that's a great restaurant as well.
That's okay to shamelessly talk your own book when it comes to a restaurant, because we know you're such a foodie. Thank you so much, Moez, for joining me.
Thank you very much for having me.
And thank you to everybody for listening. Don't miss our next episode. It is all about the election results and what it means for your money. We've got Eric Nuttall talking the energy sector. We've got Jim Thorne talking the macro. And to help us break it all down, my pal, Francis Hordelsky. Tune in on Thursday.